This video will cover the next three indicators in the list. So the breakout box, the cash machine, and the daily range. Okay, so the breakout box is a indicator that basically paints a square around price or a certain set of bars, and it paints a breakout after that box has closed. So you'll notice on the chart, you'll see these pink boxes and green boxes. So as soon as a price has a confirmed breakout, it will paint the box around those preceding bars. Now, this indicator is a repainting indicator in the sense that this green box is not going to appear the moment the price goes out of the box. It's only going to paint this green box around price after it has confirmed the breakout of price. So it will be on that candle as an example. So this box will stay gray until it has confirmed a breakout. So this is the first candle that has closed, and this is the next candle that has formed after the breakout box. So that is what's going to happen with these candles. It's going to be the bar after the breakout. And the good thing about this indicator is you can actually stay in a trend for longer. So if you're seeing more breakout boxes appear with the same direction, it's a good indication that that trend is continuing. So let's have a look at a few options. Now, once these boxes form, they are going to stay there. They're not going to change color afterwards. So whatever box you see, it's going to stay there. So you'll see green and pink boxes that are there. So like example, green, pink. That's not going to change color after the fact. It's going to stay that color once it has painted. So at the moment, you can see we're in a consolidation period at the moment, where it's got a slight grayish box around the price. There is a way to actually increase or change the coloring of it. So that's called a congestion box. So where the price is congested, it's just basically bouncing around an area. It hasn't got a specific breakout yet. And then you can obviously change the coloring of these boxes. And you can also change the amount of bars that a box is monitoring. So if you want to increase the amount of bars, you can actually do that. If you want to decrease them, you can do that too. So those are the settings for this specific indicator. It works best on bar close, so you can get that confirmation of that breakout on the bar close. You can also set audible alerts for this indicator to give you a confirmation note once a breakout box has actually occurred. So as soon as a green breakout box or a pink breakout box has formed, it can actually give you an audible alert, and then you can go and choose your different audible alert. So that's it there on an 8-8 chart, and here it is on a 16-4 chart. So same type of thing. You're going to get your breakout boxes, you're going to get a congested zone, and it's going to give you that coloring of that box once it's confirmed a specific breakout value. So again, you can take this on, it'll work well on longer term trends. In a congestion box area, you could be taking scalping positions within that area. So while the price is undecided, that can also be done, but those boxes are going to appear, and they're just another little indicator to help of where more likely price is going to be going. Is it going to be going up or down based on those breakout boxes? The next indicator we're looking at is the cash machine indicator. Now this is a fairly complicated indicator. So what this does is it gives indication of very high volume and very high order value being placed into the market. And you'll see the different times. So this is the order and volume values, and what these often foretell is basically a change in direction of price or a continuation of the current trend. So you're going to see these numbers, and obviously during the 9:30 period there's just going to be very, very high volume, so it's not going to be it's going to give you volume in both directions, extremely high volatility, so it's kind of not a good time to look at. But you're going to have these situations where a trend is going to form. Let me apply another indicator which really helps look at this a bit better. So I'm going to go to the indicator, and we'll cover this indicator a little bit later, but it's good to look at this specific indicator with this chart. So very often this indicator in real time, this is what it's going to look like. It's going to show you the order value, and it's often going to tell you reversal in price. So they're going to be pushing the price up and pushing that price down. So that often can tell you a reversal point or a continuation of a price breaking a support level and they forcing that price down, continuing that force down. And then when you get divergences from this indicator, it could also foretell a price reversal point, even if it's for a short period. The momentum line gives you a clear indication of the strength of a trend. Obviously facing up is a buying, and when it's facing down it means there's a strong sell pressure. So that's what this indicator is going to be doing. The cash machine is just going to show you periods of very high volatility, very high order flow into the market and the volume being pressed, and often it will foretell a reversal point. So like there's a classic case of a pure reversal point. You've had the major order flow come in, the price has hit support and resistance, you've got your divergences, the momentum line is right up. Great time to be looking at a buy in that market. Over here, so it's the momentum line on this indicator is really good, but when combined with the shadow or with the cash machine, it's just going to give you those areas where price is likely to be changing over, reversing. This is at the 10 o'clock mark, very high order flow still, hitting major support and resistance, divergences, and ultimately the price drops a bit. You got your arrows facing up again. So that's what this indicator does. I'm going to provide more training on this cash machine indicator on a future video with a few updates to it also. But for now, just have a look at it. It's got some settings in it where you can actually put different caps. So based on the volume and the order flow, you can put different levels in there, and that will adjust the alerting of those bars and alerting of the volume and the order flow being pushed into the market. Okay, so I'll remove the shadow trading. It's also got a paint bar feature, so you can select a paint bar. You can select paint bars on this indicator, and what that does is it's going to show you those those areas of very high manipulation or order flow going into the market. So that'll also color that. So it's a good time to beware of which position you are in, because there's a lot of orders in both directions being flowing in, and it could mean this price could go anywhere. All right, the next indicator we're going to look at is the daily range indicator. Now this is a very, very special indicator. You can select how many days you would like to see for the daily range. Now the daily range is basically how far the price will travel in a trading day. So from its high to its low, that is the range of price movement in a specific day. So you can select over here, you can put commas over here, and you can basically add any days that you want. So you can even add a 60 day there, you can put a 90 day, you can put all different values in there, and it will basically add to the list on the left. So at the moment we've got 1, 2, 3, 4, 5, 10, 15, 20, 30. So those are the values that we got in there for the daily range. The start time and the end time of the day is selected. And it does have options to email you different alerts at different percentages. So that's, I'm not 100% sure whether I've connected that. I'll just have to look into that, but I'm sure that still works. I just haven't used that for a while. But what this does is it's going to tell you that yesterday's daily range was 371 points. The daily range of 2 days ago was 330 points. Of 3 days ago, 304. So it's going to give you all those days of daily range. These are trading days. And it's going to tell you the average daily range of the last of all the days that you have selected. So that is how far the price travels on average every single trading day. So 304, so if you go 304 points times 4, so the price travels 1,216 ticks on average every day from its high and its low. So in that range, from between high and low, it travels that amount. So you can see basically during the trading day, so in the early afternoon of the US session, you can see what the current daily range is. So over here on the left, it shows current daily range in points. So that is how far the price has traveled today so far since market open. So I've also just included the indicator here to call it, I've included the basic standalone indicator from NinjaTrader called the current day open, high and low. And what you can do is you can apply your ruler and you can look at the low of the day, which is this red line, and you can go to the top of the day, which is 200 and I think it's 200 and if you get it exactly right, so 244. So if you take 244 ticks and you divide that by 4, it's 61, and that's their current daily range, 61. So that's how far the price has traveled from its low to the high. And if it was high, if the price started high and it was coming down, it'll be from high to low. So that is just the range of the price that has moved today. Again, you've got your average daily range, so you can just have a quick snapshot and see, okay, the price has traveled so far 61 points. It's still, the average of the day is 300, so it's got 240, well, there we go. It's got 240, to get to the, it's got 274 points either to go up or 270 points to go down from its current point. So that basically is going to give you an indication of how far the price either has to go up or how far the price either has to go down to fulfill the average daily range. So that is pretty handy, especially in the early afternoon of the US trading session. Say for example, in the early US trading session, the price has moved up 220 points and the daily range is 300. The price would have to go 240 points down plus another 70 points down to fulfill the daily range. So sometimes later in the afternoon or even the early afternoon, the market makers and the institutions do not have enough time to basically push the price all the way down to the low of the day and another 60, 70 points. So to fulfill the daily range, they'll just go up another 40 points or whatever the value is of that daily range. So you're going to find that this daily range is the average is going to be hit on most days. You're going to hit that average daily range on most trading days, and that's why it's there, it's the average. So obviously some days it's going to be lower. Like 30 days ago it was only 244, but of late it's been in the 300s. So you can see it's been very close to the 300 mark in points every single day. So it's a good judge of where price is more than likely to be traveling for the rest of the trading day, or if it has already reached its daily range for the day, it's more than likely just going to hover around a midpoint area or between the high and the low. It's not going to go and chase further highs because they've already fulfilled their average daily range. So that is something to look at, and it's just going to tell you over here the current high of the day, the current bid, and the current low of the day. It's going to tell you what the highest range was in points, so the highest of the period that you've selected, which is 371.75, which is 1 day ago. It's going to tell you that the lowest range over your period that it was, and it's going to tell you currently we up. So from the big, we up from the low of the day or the open of the day, we're currently up. So that is the main idea with this indicator. Now you do need to go and load enough days for this to work. So if you only load 30 days, these are 30 calendar days, then it's not going to have enough data to calculate this. And in fact, if you put 30 days on there, it's going to tell you not enough days loaded. So that means this is 30 trading days. So you've got to just go and add extra days so that it can accommodate all the days. So again, if you're going to be putting in 90 daily range and a few larger numbers, you've got to increase the number of days to load on your chart. So load this indicator up with the analytical bars. You can choose break at end of day on. And what that'll do is it'll just give you a very clear picture of where price was, the open of the day, and it's going to do that for this too. So the previous day open, price came down, it went up, and it continued up the entire day. So the good thing about this too is late in the US session, even at 10, 11 o'clock in the morning, the daily range the price has already risen up, from the low to the high. Well, that wasn't the high, but the price has risen up. But to fulfill that daily range, they would have to bring the price below the low of the day, way below the low of the day, to fulfill that daily range. So the most likely thing that they'll be doing is they'll just be pushing the price up further. Now those aren't obviously exact statistics or exact amounts that I've put there. It's just that during the day you'll see that if they've broken the high of the day and they're pushing the price down, they may not have enough time to bring the price right down to below the low of the day to fulfill their average daily range. So that'll be more evident on other trading days, where you can see the high of the day, the low of the day, and what they're doing. Right, yeah, but definitely have a look at this indicator. Load it up on one of your charts. Have a look at it in the early afternoon, and just see how far price still has to move up or down to fulfill the daily range, and put some markers on your chart. Put some markers and say, well, according to this indicator, the average daily range is this value here, and it either has to go up to that value or it has to go to this value over here to fulfill the daily range. And then what you can do is you can come back tomorrow and you can see what it actually did. So it's either going to go up, the price is from wherever the price is of the day, it's either going to go up and hit the daily range, or it's either going to go up or it's going to come down and and hit a point like that for the average daily range. So that was, if you were looking at a chart, for example, say you were looking at a chart and this was the current price, you can draw this marker, and for the daily range, you can see from the low of the day to the high of the day, you can actually put that marker and say that's 303 points from the low of the day. And to fulfill the daily range, it either has to go up that value or it has to come down to this value. And then you can actually plot those on your chart and you can see what actually happened during that the day afterwards. So that's just as an example of how to check the indicator out. But just from this over here, you can see that it's explaining the average daily ranges and how far price is more than likely going to be traveling for the rest of the trading day. Great, so hopefully that was informative, and I will be covering the next indicators on the list, which are economic news, EMA, and momentum bars. Thank you.